Hey guys, this is Alvin Taveras, and today we're going to be talking about how to get a U.S. visa through real estate investing. The U.S. and Canada have always had very friendly relations. We share the longest land border of any two nations in the world. But recently, there's been a lot more news, been a little bit more tension, and people are a little bit uneasy. And the goal is we're going to analyze what's happening in the market right now and figure out the best way to play it.
U.S. President Donald Trump says he will now impose a 50% tariff on copper imports.
President Donald Trump is threatening more tariffs, including one on pharmaceuticals, where the rate could be as high as 200%.
5 new letters were just posted on Truth Social announcing tariff rates set with 5 different trading partners. It was Laos, Myanmar, South Africa, Malaysia, and Kazakhstan.
Donald Trump says he wants to put new 50% tariffs on copper. Does your government still believe that Canada can get a deal without tariffs on Canadian industries by July 21st?
When it comes to the latest declaration from the president, of course, our embassy in Washington is following very closely.
Tariff rates, do they change on July 9th or August 1st?
They're going to be tariffs. The tariffs are going to be the tariffs. I think we'll have most countries done by July 9th, yeah.
So it seems that Trump likes leaning into confrontations, and part of the mission that he had was he wanted to increase tariffs across every nation in the world. And he wanted to increase tension in order to strengthen the U.S. manufacturing center. He was hoping to make it cheaper to invest in the U.S. and build in the U.S. So that includes friendly nations and oppositions. One of the friendly nations is, of course, Canada, which we have a lot of alignment. But when it comes to politics, Trump and obviously a more liberal Canada is going to be in more direct opposition. The latest news was that Canada was going to put a tax on technology, which basically would go against a lot of U.S. firms. This tax would have been at 3%, and it was a way of charging American companies for the business that they do in Canada.
So, Sam, Trump said that he's cutting off all talks with Canada because of this digital services tax. What can you tell us about how it impacts American companies and why the president is so upset about it?
Well, this tax will hit the big companies. We're talking Amazon, Google, Meta, Uber, and Airbnb with a 3% levy on revenue from Canadian users. And this will apply retroactively, so back to 2022, I believe. So that leaves U.S. companies with about a $2 billion USD bill due at the end of June. The statement from the CCIA says Canada's decision to begin collecting payment under this unfair and discriminatory tax marks an unfortunate escalation in the targeted efforts of foreign governments to extract revenue from leading U.S. firms while exempting their own domestic competitors. This undermines not only a key U.S. export sector, but also bilateral trade ties between two critical partners.
At the moment, Canada and the U.S. are currently negotiating trade agreements, and Trump threatened to take this off the table if this tax went through. Canada has since repealed and removed that tax on technology companies. It's worth noting that the U.S. leads the world in tech firms. A lot of that has to do with how easy it is to invest, how easy it is to hire in the U.S., and obviously the U.S. is very dominant in that space. Canada also recently voted for Mark Carney, who's a liberal and obviously is in opposition of Trump and a lot of his Trump's policies. Mark Carney basically ran on being an opposition force to Trump. So obviously this introduces a lot of friction. And there are a lot of Canadians who maybe aren't conservative or not as conservative in the way that Americans think of it, but they want to be more in the middle. Mark Carney represents a much more liberal government, which obviously is going to split the country in half because a lot of people aren't looking for going in that direction. And a recent poll from YouGov said that 48% of people thought that Canada was going in the wrong direction. And all of this had caused Alberta, one of the largest provinces of Canada, and the largest oil producer of Canada. They're very rich in fossil fuels, a big energy sector. Alberta actually pays more in taxes than it receives, which also caused a split. So there's currently a separatist movement taking place in Alberta where just values are different than Ottawa and some of the other provinces of Canada. And additionally, they just want more control of how their revenue is being spent. Alberta is much more like a Texas, Oklahoma type of state, very heavy in energy, very self-sufficient, very proud of their ability to take care of themselves. And they, a lot of times, align themselves more with the US than they do the rest of Canada. They have much more of that cowboy culture and cowboy spirit. In fact, a lot of officials get mocked when they go to Alberta because they're wearing cowboy hats or trying to fit in to the culture there, and they're just not naturally from there. Cool. So there's some division, there's some tension. What does that mean? How do we play it? Well, this whole conversation got kicked off when I got an email from an investor. And he basically asked me, how do I get out of Canada? And essentially what he was asking is, what are the steps I need to take in order to invest in the US so I can eventually move myself and my family there? Now let's go through the types of visa. The first is going to be the E2 visa. There are a set of countries that are on this treaty list. Basically, it's reciprocal, where investors can invest in different countries and then apply for this types of visa. So here's the thing. It's not really visa by investment, and that's very important to understand. So the key language is that there's significant investments, and there isn't a clear ruling of what's considered a significant investment, but generally it's seen as being 80 to 100K. The key is they care more about the growth and the impact to the economy of the US. And that's the number one factor the US is looking for. It's not that you just buy a house for $2 million, then you apply for the visa. It's more about what that investment actually creates. So is there employment? Is there a transaction? Is there a business that's formed? Is there more investments coming? What is it that initial investments creates? What opportunities are now created? So the key is you must be a treaty country. So Canada qualifies as a treaty country. You have to continuously renew the application every 2 years. It's not permanent. And the benefit is it includes the benefits to your spouses and to your kids. The second type of visa, and this is more for permanent residency, is called the EB-5. This requires an investment of about $800,000 up to $1 million. You want to show that you're creating jobs. Typically, the number is about 10 jobs or more is what your business has now created. And this can lead to a green card. The third type is called an L1, and this is more if your company is expanding into the US. So if you have an existing business that's expanding operations into the US, this is also called an intra-company transfer, where you transfer somebody from another country into the US. And you would be able to transfer yourself as an executive of that company. So the question is, should just anybody outside the US invest in the US to get one of these visa programs? And the answer is probably, but there's a couple of things you want to know before doing so. So the taxes are going to be different. The legal structure is also going to be different. So the goal is you just want to make sure you're working with the right partners who've done this before and you're getting the right legal advice, because again, it may be in a different language or it's just structured in a way that you're not used to. And it's worth noting the US is a very litigious country compared to a lot of other countries where some things you kind of just wave off. That's not a big deal. In the US, people can sue you for almost everything. The other thing you want to keep in mind is just you're going to be operating in a different currency. So the dollar may get stronger, may get weaker. The lending terms are also different. You're also entering a different financial system. This also means that your lending terms are going to be different. So just because it's different doesn't mean it's bad. So it's going to be very important to understand the differences and how to take advantage of all of the benefits. And we're going to go through some of them a little bit. All right, so now we're going to go through some of the benefits of investing in the US. Now, if you're Canadian, the big one, the headline is going to be cash flow. So Canada, for the most part, is seen as an appreciating market at best. Some will say that it's very risky because it's not justified by local economies. Canada has had a skew of investors going in, and they're just buying boxes in the sky. If you're from China, Singapore, some other country, a lot of people are just investing in Canada, and they don't even need to see a return on that property. They just want access to the Canadian dollars. They just want to have some of their money outside of their country. And that happened a lot in Miami, where a lot of people leaving Venezuela, leaving Argentina would just buy something, not expecting a return. They just wanted to get their money out of the currency. So the same is happening for a lot of Chinese individuals. They don't have a lot of options as to what they can invest in. So the idea of moving money outside the country into another country, and even if it just stores the value of it, they're happy with that. So when you're investing in a country like Canada, you're having your prices forced up by these foreign investors. And if something were to happen to the economy, something were to happen to their economy, it could impact yours. The other major benefit of investing in the US is our lending terms. Now, a lot of Americans don't know how good they have it, but a 30-year fixed rate mortgage doesn't exist in a lot of other countries, especially not in Canada. Canada, it's usually fixed for a period of time, or it's an adjustable rate mortgage the entire time. Now, in the US, that is crazy, right? A lot of investors don't like the idea of being an adjustable rate mortgage because of the fluctuation. So in the US, you can get a 30-year fixed mortgage, and that same interest rate is set for 30 years. The other thing is that the US is just more diverse. We have a lot of more investable markets. So if you're looking at more strictly cash flow, looking at more rehabs, you're looking at more up and coming. Because the country of the US has so many more markets in it, you have a lot of different investable strategies that you can deploy. I always kind of look at Canada as like everything being Manhattan or Los Angeles. Very liberal, very tenant friendly laws. So in a lot of markets in the US, we have guns. So like in Florida, if your tenant's not paying, you can get the sheriff. They can be removed by a weapon. When you invest in Canada, California, and New York, the tenants have a lot more power. And so it's hard to get your tenants out. And so the question is, do you actually own your property if you can't remove the people who are occupying it? For me, it's no. So states like Florida, North Carolina, Tennessee, they are a lot more friendly when it comes to landlord because of the ability to remove your tenants. So diving deeper into the loan programs, we actually have two great loan options for our foreign investors. And the cool thing is these are called DSCR loans, and DSCR loans do not require any income. We're actually looking at the property itself to see if it justifies the loan. Interest rates will be a little bit higher, but again, the fact that you don't have to prove that you have income in the US, the fact that we're not looking at your credit score, it's almost like if you just have the money and the deal works, you'll get approved. So we have interest rates available as a DSCR as low as 6.7% interest rate. This is using 30% down, and this is a phenomenal deal. If interest rates go lower, you can always do a cash out refi, get some equity out, and obviously get a lower interest rate at the time period. But the fact that we can get this loan with no income in the US is absolutely amazing. So if you're a Canadian and you're looking at places to invest in real estate, it's very difficult. So as an American, we don't often realize how expensive Canada is. Canada is absolutely expensive. As an example, the average home in Toronto is close to $1.1 million. The average house in Vancouver is $1.2 million, which basically is the entire country of Canada is priced as if it's Manhattan. And for us, Manhattan is seen as the most expensive market you can be in. The trade-offs are questionable, right? Whether or not you get enough for that value. And so in Florida, it's a complete opposite. We have inventory of properties that are selling for $240,000. On average, they're going to be around $310,000. So you're literally able to get a way better value in a market like Florida, actually get cash flow and still get that appreciation. And again, $1.2 million for a condo in Vancouver, to me, absolutely absurd. I don't see the rationale. And again, that deal's never going to cash flow. You cannot charge somebody enough rent to make that deal cash flow. All right, so here's the strategy if you wanted to get a visa using real estate investing. The key is you want to start acquiring properties, maybe buying one a year. And so if you got to the point where you have 5 properties, now you want to get an LLC to manage those properties. And the key is when you get that LLC, you want to make sure you're actually hiring people. You want to make sure you're counting the income, counting the expenses. You want to make sure you're documented all the repairs. Because what you want to do is essentially create a management company. Now, you're not going to do a management company for year 1. We typically offer 2 years free property management, in which it makes sense for you to take advantage of that. The key is you want to continue your life in Canada and just every year deploy capital in the US. Then you get to the point where you have enough properties where you can create an entity to manage those properties. That entity is what starts hiring and managing other people. The goal is you want to capture the economic impact of having that company in place. So what are the benefits of having a US visa? Obviously, you get to have your wife and kids all live in the United States. This also means you get access to the educational system. Now, our medical system gets mocked, but it's obviously top notch. And a lot of Canadians go down to the US to get medical procedures. So obviously that becomes accessible to you. Additionally, your kids can now apply and go to universities here in the US, and they can work in the US as well. So as we talked about before, with regards to technology companies, a lot of Canadians view that the opportunity for them to build their own wealth and establish themselves as professionals is to move to Texas, is to move to Florida. So a lot of Canadians are looking at the US as far as like, hey, I want to be able to invest there so that my kids can then work in the US. And even if you love Canada, the US is obviously where a lot of the innovation is happening with industries like AI, like robotics, et cetera, et cetera. That creates a lot of opportunities for your kids to then start their careers and blossom in emerging industries. So the question is, why to rent? Well, we focus specifically on just new construction properties. So obviously, it's going to be a lot less to think about when it comes to repairs and issues. You're going to get higher rents, and it's going to be obviously just more easier to manage. The other thing is you don't have to become a local expert. We spent the time to actually go through our inventory options and identify the best opportunities for you. We also package these deals together. So we often already include interest rate buy downs. We have the loan programs. We have free property management. We have this all kind of figured out for you. So you don't have to be as obsessed as figuring all these things out on your own. We also have local representations. So we have district managers who are actually in the markets that you would be investing in. So for example, I don't live in Jacksonville, but we have a district manager that does. So for the inspections, for the walkthrough, for everything that you can need, we have someone there locally that can manage and look at those properties for you. So we're going to very quickly go through an example properties. This is a duplex in Homosassa. This is using a DSCR loan with the seller buying down the interest rates. And there's going to be an initial investment of about $155. And here's what I want to share with you today is when you look at the cash flow, when you look at the tenants paying down your debt, when you look at the appreciation, when you look at the tax benefits, you're going to get close to $51,000 in wealth being created back in that very first year. And if you look at the total 5-year IRR or the GEI with tax savings, you're going to do very well. So again, 5-year IRR is 24%. Your GEI with tax savings at 33%. These are substantial returns. And again, the key here is that the investment is funding the deal. So you buy the property and the tenants pay down your mortgage. They're paying down the cash flow, and you actually get the benefits of both cash flow and appreciation. And compared to that Vancouver condo that we saw earlier today, that itself was at $1.2 million, this is less than $500,000. You're getting a duplex with 2 units. So the value in Florida is absolutely insane. All right, guys. So now I want to hear from you. Are you currently a foreign investor investing in the U.S.? Are you looking to become a foreign investor? If you're looking to invest in the U.S., I'd love to hear from you directly. You can go to buildtorrent.com. We can schedule a consultation and talk about your next steps.